Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, April 27th, 2017. It's about 1:43 p.m. Eastern Time as I'm starting this video, and I wanted to do an update on gold, GDX, which is the ETF for the precious metal mining stocks, and then the US dollar. As I often say, in my opinion, any analysis on gold is incomplete without analysis on the dollar. So before we get into the charts of the dollar and gold and GDX, this won't be a very long video. Let me just take a look and explain what I mean by any analysis on gold being incomplete without taking the dollar into account. This is a long-term chart. This is a 10-year weekly chart of the US dollar index. The black line here is the US dollar index. The blue line is gold via the ETF GLD. And as you can clearly see, there overall, there's really an undisputable inverse correlation between the dollar and gold. Now, as I often say, like just about any relationship with two pairs of asset classes in the financial markets, there are periods of temporary disconnects, meaning that the inverse correlation sometimes unwinds. Sometimes you can have a positive correlation or a very low correlation. In other words, one moving down, the other moving up, or I mean, both moving up together. Maybe gold's moving up and the dollar's trading sideways. But what you got to look at is the bigger theme here, the bigger picture. And simply, I'll draw it here. See the blue line, dollar, that was, gold up, dollar down. Then from this point, blue line again, you can see the gold dropped as the dollar shot up. There was a little bit of a positive correlation, but for the most part right here at this point, the black is the US dollar dropped, while gold started shooting up. At this point, dollar fell, gold shot up. And then you can see the bigger trend here. Of course, there's the gold falling down during that time period as the dollar was rising. So, the correlations are pretty clear. You can see it marked on this chart. Again, when I talk about the temporary disconnects, those are disconnects that can last for days, weeks, on very rare occasions, months. And if that chart just kind of blew your head away, if you're not a very visual oriented person and it looked a little busy, let me just show you another way to do this. You can also compare gold, which again is in the blue line, with UDN, which is the ETF, the inverse US dollar ETF, meaning it tracks the dollar index but inversely. So it's just a way to go short the dollar index. And so we're basically just flipping around the chart of the dollar. So therefore, we should now see a positive correlation, meaning one goes up, the other goes up as well. And you can clearly see that. Now, don't pay any attention to where the lines start or the differential between the two lines. Only when you're looking at trying to identify correlations, you only look at over time, are they moving up and down together? Remember, gold isn't priced, it doesn't move in percentage terms exactly what the US dollar index will. Gold is going to move up more. If the dollar rallies 10%, gold's going to go up 20, 30 or more. So it's, again, you just look at the trends and it's very clear that overall, especially the bigger trends here, you can see, again, what you see is a positive correlation. Now, you might see the big differential here I pointed out. That doesn't matter. The point is, if you dig down deep within, zoom in, you can see here's that period where you see it puts them together once you, it puts the lines together once you roll the chart. I'm just zooming in here. But you can see, again, how well they act. One goes again, we flipped it around using UDN, so this is more of a positive correlated chart. And if that doesn't convince you that gold and the dollar have a very strong inverse correlation, I don't know what does. So, all right, now let's take a look at the dollar, because as I often say, if you want to get a good idea on where gold is going, you need to get a good read on the dollar. And I also use that to help either reaffirm my analysis if I'm bullish or bearish on gold, or possibly refute it. And right now, the reason I'm doing this video, I made a case recently that we might get a reversal in gold here soon. I even posted in the trading room taking a starter position as I had planned into gold, GDX yesterday. I may probably right after this video by the end of the day, close that out. It's a small, as I mentioned, I only took a starter position. I had planned to scale in, and I'll talk on that in a second when we get to the charts of GDX. But I wanted to show you, make the case that we may see a bounce in the dollar here. Before I get to the near-term charts, and again, I usually try to do a very good job of differentiating my views when I'm talking about any asset class, any trading vehicle. I talk about near term, intermediate term, and long term. So plain and simply, I'm longer term bearish on the dollar, which also puts me longer term bullish on gold for the reasons I just discussed, as well as the charts on gold itself. I wouldn't be bullish on gold only because I'm bearish on the dollar. I want to, again, see the charts align, which I believe they do on the longer term time frames, the weekly charts. So we're looking at a 10-year weekly chart of the US dollar index here. A couple points, and I've covered this in the past many times actually. You can see in some cases, here's your divergent highs. Some of the things I like to look for: negative divergence leading to corrections. You can draw up and down trend lines, buy signals where breaks of these downtrend lines. So you can see the dollar index over time trades pretty well to the technicals. Here was a support level it held. And as I highlighted, in the last decade, we've only had 1, 2, 3, 4 instances where the US dollar has been overbought. By overbought, I'm referring to any level 70 or more on the RSI. And you can see what happened. Those were the largest corrections that we've had in the dollar over the last decade. All came shortly after overbought readings. As I often say, overbought in itself is not a sell signal, far from it. The reason being is that overbought can either stay overbought for an extended period of time, as it did here, or become more overbought. In other words, when you crossed above that 70 level, we crossed over it there. Look what the dollar did. So you don't short security just because it's overbought. It is, however, a heads up that, hey, things are getting a little frothy. And one of the closest thing that I have to a sell signal, just simply using the RSI, which again, I make clear, I don't use any one single indicator as a standalone buy or sell signal. I use it in conjunction with everything else: price action, candlesticks, volume patterns, divergences, the momentum indicators. But the one thing that I would say is the closest thing to a sell signal on the RSI is when you have an overbought reading, once it crosses back down below that 70 level, which is, again, widely considered the overbought level. So right here, for example, you see the RSI cross down below, and that's where, the dollar started. At least it topped, it moved, it did correct, and it moved sideways for a while. So again, you're better off waiting. As you see, I put the vertical lines where the RSI crossed down below. Here we had, and this is something else I talk about when using the RSI. It was an effective measure there, effective signal. We had a very sharp correction in the dollar, but then it ramped on to a marginal new high. And something else that I use when looking at the RSI is that sometimes we have what I call one and done overbought readings, such as this one here. We became overbought. There wasn't really any divergence. I mean, there were two small peaks in there. But this one, you had an overbought reading. Prices came back in to about the 50 level, which, by the way, often acts as support and resistance. That's the dotted line there. Just take a look as you go from right to left or left to right. How often, when prices when the RSI, I should say, falls to that 50 level, it tends to act very well as support when tested from above, at least on the initial reactions and sometimes for a while, or resistance when tested from below. Again, not an exact, sometimes you might go to 52, 53, 55, but you can see for the most part the trend is bullish when above the 50 level on the RSI, bearish when below. So it has crossed below here by a pretty fair margin right now. So I wanted to make mention that sometimes you get these one and dones. Sometimes you have these divergent highs where you have an overbought reading, come back in. In this case, we hit the 50 level. We ran up again to just about right around the 70 level, and that put in negative divergence, which is even more powerful sell signal. But you don't always get that second pop up to the overbought level. Here's one where we fell a little shy of the 70 level, but we had a divergent top, and that led to a correction. And also even though it was a correction more so in time than in price on the dollar index, it was certainly a correction because the dollar index traded down to sideways for a couple of years there actually. Here was a very extreme, the most overbought readings that we've had in probably decades, many decades on the U.S. dollar, and heck of a run up, and it's really resulted in one very large sideways trading range here, and I also note that that's also a very large, powerful divergent high. You can see the negative divergence on the PPO, the negative divergence on the RSI down here with the RSI just coming off. It did exceed that 70 level, so it became overbought most recently here where the circle is, and it is rolling over. So from a longer term perspective, and again, we're looking at a weekly chart, I remain bearish on the US dollar. I think we're going to come at the very least to the bottom of this range, and I think we'll break through there. We don't have really, if we do break through the bottom where this horizontal line is, the next support's down here, and down around the 89 or so level on the US dollar index, and I think that's where we go over time. But when I say over time, I'm talking months, could be a year or more, but we'll see. Securities, even an index like this, a dollar index, they tend to fall very often faster than they rise, although in looking at this chart, that really hasn't been the case so much in the dollar index because we've had some very sharp ramps in the last few years. But the rips again can be just as equally sharp on the downside. So this is the bigger picture, guys. Sideways consolidation range over the last few years, and as I often talk about, sideways ranges don't last forever, and when they do, the tighter that price compression, usually the more powerful the move is out of there. So that's my long-term view on the dollar. Take it for what it's worth. And now let's just zoom in and look at the daily charts. This is the dollar index on a daily time frame. I should make mention that the dollar index is an end-of-day chart, so the 0.15% that it shows up, that's yesterday's close. I'll get to UUP in a second. That's what I use for tracking intraday moves. But what I look at, what I'm seeing here, and pardon me because I didn't have time to clean up all the annotations on this chart. The salient technical levels that I'm looking at now, I'll make these yellow, would be these two downtrend lines, which form a falling wedge type pattern. You can see prices making a series of lower lows, and you also see bullish divergence here, potential, what I call potential divergence. We did have a divergent low at this point, and as it often does, that divergence did play out for a very nice pop in the dollar. You can see from this point to the top of the wedge. Prices came back down, tested that downtrend line again. So if the dollar index turns up here, as I suspect it will because we have another potential divergent low. Now we need to see prices start to move up, so the PPO will then reverse and make a bullish crossover, therefore putting in a higher low than this previous low to form bullish divergence or positive divergence. Possible that we go a little bit lower as long as we don't take out this previous reaction low. Then there's still potential, if it wants to come down a little lower, to still have positive divergence. You can see we also have, at this point, the RSI is turning up a little bit, so we're making a divergent low on the RSI as well, and I like to see it ideally on both indicators. The last time, then when I go to the left of the chart, that we had bullish divergence on the US dollar index was at this low right here, that spike low down, looks like in the beginning of May. And of 2016, that is, and you can see the tremendous rally that caught or was a heads up, an indication of an impending trend change after this big correction. And those divergences, like they often do, did play out indeed for a nice correction. So now let's zero in a little bit more. We'll look at UUP. UUP is trading up about the same today, about 0.16%. Remember, the dollar index doesn't trade. You're not seeing 4, 5, 6% daily swings in the dollar index. So these are, you can get some bigger moves at times, but this is pretty normal. Haven't marked it all up yet, but you can see same divergence on UUP. And remember, UUP is just the ETN that tracks the dollar index. So there's that same divergence. You have a little minor downtrend line here, and that's going to show better on the 60-minute chart, which I'll show you in a second. So even though I'm longer-term bullish, this puts me on, longer-term bearish on the dollar index. This indicates we may see a pop here. Let's try to go to the 60-minute chart, see how far that may go. There's a 60-minute chart. I haven't finished marking it up yet. I wanted to get this video out. I know there's quite a few of you that are interested in gold, and some others that took it yesterday in the trading room. So, on the 60-minute chart, you have these little divergent lows, falling wedge like we had back here. That led to a rally. You had a ascending price channel, breakdown, back test, moved up, made another high. Not necessarily a divergent high, but we did have a divergent low down here at this point, and you can see that was a catalyst, or at least provided the fuel for this rally. That rally terminated, if you follow along here, I know I'm going fast. This rally right here terminated in a bearish rising wedge pattern, confirmed with negative divergence, as you can see drawn out here. So there's your negative divergence, and that warned us of an impending trend change, especially with a bearish rising wedge pattern, which is inherently bearish when prices start contracting towards the top of a wedge pattern. And we had a breakdown. So now the bigger picture, and I'll clear out those annotations. You can see with the yellow lines, but I'll draw over it with these purple lines. At this point, UUP has just made a lower low. When you go back a little farther in time, you can see that the PPO, the RSI, as well as my 1333, that's the EMA pairs, the 13 and 33 EMA, I just put it in histogram form here. They all have bullish divergence right now. And that bullish divergence was confirmed at this point. So maybe we can turn down here, possibly, if the dollar index does take a little dip down. It even makes a lower low. As long as we keep these divergences in place, there's still the potential for a rally. Let me try to give you some targets. I haven't really, like I said, updated this chart. There's a reaction high here, reaction high here. Okay, sorry, I had to pause the video there. I had an interruption, but it's hard for me to say if this pattern breaks out, but the things I am watching for, again, it's a potential reversal. It's giving me caution right now on the gold, the GDX long. And if I had to flip a coin, pick one of the two, I'd say there's probably a little more downside. At the very least, the risk reward isn't clearly skewed to the bullish side on gold right now, because I can make a bearish case in the dollar. And therefore, the key with trading is don't force trades. So what I can do with that GDX starter position I took yesterday is one of two things. I can just close it today for basic break even. I think it's up just a hair from where I bought it. Or just trail a stop. Maybe I'm wrong. Maybe the dollar makes another thrust down. Gold makes a thrust up. I'll give you some targets in a second on GDX. But these are all potential targets here. And at the upside, probably that 26.14 level is what I'd be looking at. Okay, I don't want to spend too much time on the long-term picture of gold. I've covered that, so many times recently. And again, not a lot changes on the long-term charts, at least on a day-to-day or week-to-week basis. This is a bigger picture of gold. We had a heck of a bull market. We had a nice bear market. Gold came down to a major support level I was highlighting for a long time. We were bearish right at the top on gold. Never got stopped out, able to, make a nice run down on the short side. And here's the bigger picture, just to fast forward for those of you that haven't seen my longer term analysis. This was a descending price channel, slightly contracting right down to support. So gold broke out, back tested. Here's a breakout, the first leg up actually off the bottom. That's the first leg up. We had a back test, and that came in perfect back test, and gold has moved higher since then after successfully back testing the top of that descending channel. And so longer term, this chart taken in conjunction with the my bearish views on the US dollar. Remember that it's not just simply a back test of a random trend line. It was a well-defined trend line, and most importantly, we had some strong bullish divergences in place, and therefore that puts me, longer term bullish on gold. But near term, I have my thoughts or my concerns. Let's see, here's a daily chart on GLD, something I showed recently. A couple things to note. We had a divergent high back here, and I pointed that out at the time, a small divergent high, bearish rising wedge, and that certainly played out for correction. Gold then rallied, went on to make a new high. Let me clear out those lines and highlight these that I have. They're tuned down, they're not as bright. It really put in another rising wedge pattern at this point, and there was actually negative divergence there as well. You can see almost flat line. The PPO was about flat. There wasn't negative divergence on the RSI because we made a higher high. However, we also became very overbought. And as I often point out, when you see these extreme, overbought readings, or just about any overbought reading, really, you just look at what happened every time gold hit the 70 level or higher on the RSI. Might not have topped right away, but shortly thereafter, especially with a divergent high. That was the big one, and that really, as I talk about, when you have you get these single tap overbought readings, those in themselves are usually sell signals, but the divergence, negative divergence, is an even bigger one. So this was just a series of 3 consecutive equal overbought highs, and led to a nice correction. But here's one that's even more overbought, and we've only just started moving down. So my best guess, guys, is a move down to the bottom of this support zone here. Let me clear all these out, draw it out. A move down to the bottom. There's some nice support. I keep grabbing the wrong tool. Every time I click on the arrow tool, it brings up the circle. This would probably be, at this point now, the first area I'd look to step into maybe a full position. I talked before about scaling in, and really my trading proxy, I should make clear, is GDX. And the reason is, I don't even need to put a chart up on this. You can do it. GDX will follow gold. There is a direct correlation to that. The disconnects are very far and few between. They're temporary, but overlay any chart of GDX gold and you'll see it mirrors each other. However, the GDX is simply, and I've always said this, it's a leveraged play on gold. If gold goes up 10%, the miners are going to go up 20, 30, or 40%, and vice versa. So whether I'm going long or short, can tie up a lot more capital trading GLD, or just place the trade in GDX, put less money in, and even nugget dust, and you get the move right in gold. You're going to get the move right in the miners. Again, barring a couple days, gold may bottom first, and sometimes I point out those disconnects. If gold's rallying and the miners have not rallied, and gold looks like it's going to continue to rally, that's one of the best times to step in and buy the miners, because they then play a game of catch up to the metal. But enough of that. So there's probably the first level I'd be interested, if the dollar index confirms, if I can make a case that any bounce in the dollar has probably run its course, step in at this lower line there. I'm sure you guys want to know what that level is. I'll give that to you in a second, but that's the line I'm talking about. And these are some of the, if it gets ugly, levels in gold. I mean, it might come down here to 116. We'll have to cross that bridge when we come to it. Let's not go over every single scenario right now. That level was 118.34 to be exact, so maybe I'll start stepping in a little bit above that. Again, if the charts of the dollar index as well as GDX confirm. Here's gold on a 60-minute time frame. I think I pointed this out recently. Here's a rising wedge pattern. It broke down recently, and this was a support level that I was looking for a bounce on gold, or at least a reaction. And we had one, and that's why we had a little sharp rip in GDX yesterday afternoon, late in the day. So far, it's a reaction, but it's a pretty early target for the scope of this wedge pattern. If that gives way, which I am now leaning towards, we're probably going to go down here. There's some pretty decent support around 118.35. You can see it by the reactions back here. We have a gap right here, quite a few reactions. So that's a pretty solid support level, 118.35. And I'll be interested in taking a look at gold when it gets there, and the dollar index. And that also might give us, I don't know if we'll have positive divergence on this 60-minute chart, which has some work to do. There's nothing even close to bullish divergence here yet. So we'll just have to see how the charts develop. All right, GDX now, we'll wrap up with that because that's the preferred trading proxy for myself, and I know a lot of others on the site. Again, I believe this was pointed out recently. We had a bearish rising wedge, fairly well-defined breakdown. There was a little bull flagging pattern right there. You can see the flagging pattern right there. That's your flagpole, and then it broke down. And so it pretty much hit its measured move, and that's one reason I stepped in there yesterday. I think that selling, and here's that pop we had yesterday afternoon. I showed it better on the 1-minute chart in the trading room yesterday. But these 3 lines that I have here, this is really a support zone for GDX. And as I just made the case for gold, we may be going down to the bottom. We may not. gold may turn around or GDX and run here. But again, it's about risk reward, and right now I can't make a very compelling case that there's minimal downside and a lot of upside in the miners. So like I said, my position's small enough, I can just put a stop in place, or heck, if I wanted to, I could just continue to scale down, add down to that level, especially if the charts are firming up, and then go to a full position there. But if that gives way, that was a 60-minute chart. You can see I have a lot of levels here. They're all significant levels, but this is a support zone that we're in now, and I know it's a fairly wide zone, and that's why, again, this kind of goes hand in hand with my degree of confidence not being so high in the minors. You guys know I've made it pretty clear in the trading room and on the site that I've stepped aside. For those of you who followed the site for a while, you know me, there's times I'm in GD on the minors and you're seeing two, three, four front page posts, and then multiple posts within the trading room because I'm trading these things very actively, long or short. But I've made it clear recently I've stepped aside, and for good cause. You look at the sideways trading range. There was a rip and a dip to catch there, but there are times where if the charts aren't clear, I'd rather step aside than get chopped to pieces, because if there's any trade that can chop you into little bits, that would be the mining stocks. They're just super volatile. And so I like to let the mining stocks come to me, let the charts set up where I see a clearly bullish or bearish entry. So what are some of the things I'm looking for? Well, this would be one nice scenario. You can see there's potential, not even close to current divergence. We still have the PPO pointing straight down, the RSI is pointing straight down. But if they make an equal or higher low, and GDX makes a lower low, I'd love to see it get down to that 20.8 level. It might only get down to here. That's the bottom of this current support zone, but the $20 level is pretty significant. So if things get really ugly, dollar has a nice bounce from here. That's somewhere I'll certainly be looking to step in and buy. That's a key level. You see reactions back here, big gap back there, and there's a possibility that if that does occur, that we have then a divergent low on the daily time frame. And I really like to see, positive divergences on the daily time frame are good for swing trades lasting weeks, if not months or more. And just, you can see it here clearly on the chart when you go to the left. Positive divergence, rally. Positive divergence, this was a consecutive, smaller divergence and the larger divergence, and that was the big rally we had back in 2016. Marked by a divergent low, then you had a divergent high. All of these were pointed out on the site in advance, and not that we caught every penny of the move, and I missed a good part of this move right here, but I was in at the lows there. That was that little fake out move we had at the end of the beginning of 2016. Beautiful flush out move, break below that $13 support level, and that just launched that rally. And then you can see, it's simple yet effective. These divergences will really let them be your guide. And there was a divergent low, big rally. And right now we have potential divergence. But potential is potential because as long as those indicators and oscillators are still falling, they have the potential to make a lower low or take out the divergence. Which case we're going to have an overbought reading. Sure, that's another thing we're watching for here. Again, overbought, especially during a bullish primary downtrend. Bullish primary uptrend. Overbought are, pretty good buy signals because oversold. I'm sorry, guys. Oversold are good buy signals during a primary uptrend because oversold rarely stays oversold for very long. In a bull market, overbought can stay overbought for a long time. In a bear market, oversold can stay oversold for a long time. But the inverse holds true. So that's something we're looking at here. We're coming up on oversold with potential divergence. Again, we'll just have to see how this plays out. So there might be a little more downside, and you might say, well, I'll step in now. I'm willing to ride that out because I think we'll hold there. Well, let's just quantify that for you. If we're here right now and we go down to that $20 level, that's about an 8% drop in GDX. Multiply that by times 3 if you're in nugget or dust, and that could cause some pain. All right, I think that's it. Let me see if I covered everything I wanted to. Yep, I sure did. All right, guys. that's what I see right now, and if things change, I'll let you know. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.